Hi, today is October the 11th and this is SPX Outlook for the coming week. This week we'll have, after today, Columbus Day, which probably will be a slow day. We will have CPI and PPI and the FOMC Minutes. And also late this week and more next week, we'll have the Q3 earnings that will come out and probably start playing on the market. So here is the SPX 4-hour chart. As usual, I use a CFD because it's a 24-hour chart. Got more bars and we have a better feeling about highs and lows, and I believe my levels, Merrimath lines. And of course, if you want to have this indicator on your own trading view, just drop a message below and I will send it. So here on the 4-hour chart, we see that the market started drifting after the massive bull run on Wednesday and Thursday last week, and on Friday started drifting down, and now it's been testing this key level. It's pivot, it's also the first salient fib, so this level will probably open the gates for further selling. I don't think at this stage, even though VIX is up, I don't think it would go lower than 43.40, especially on a slow day, but we will see whether later this week this could happen. So this is what it is right now. The high level volume is on 44.05, where there was an intense battle, and I think the bears will win this one. I plotted this. It's a bit early to define it as a channel, but this could be the range as a higher range from the one we had last week, which was basically a roller coaster. So I could probably clone this one and place it somewhere below, somewhere around here, to see where the market event would eventually fall. I think 42.20 is a strong one, with of course a lot of buying in this area, 42.95, maybe down to 42.71. Okay, so this key level will determine where the market action will take place today. Again, slow day, I wouldn't take it too much into consideration, but maybe later in the day, especially with FOMC coming on, the FOMC Minutes being released on Wednesday. So I would say this one, we have a bearish bias, not a very strong bias. We have the VIX that has gone up, bouncing off the strong support. And more importantly, we see that now on the Treasuries, yields are going up. There's still no pressure in terms of the contango on the yield curve. All rates are going up. It's a change in the market environment with higher rates. We now understand that they will be tapering and probably a rate hike earlier than anticipated recently. Probably not later this year, but probably as early next year. Inflation concerns are becoming a little bit more present and tangible in the market. So this is the TNX, this is a 10-year yield. Now let's go back to this one. Of course, we know that there's a very strong correlation with the tech stocks. So I would invite you to really follow what's going on at techs. On this one, the pivot level here is on 14,680, well, just below 14,700, and the market is trying to bounce off this fib, but it should normally go and test the lower fib, and we will see. There's still a lot of momentum buying on tech, so markets can still surprise us with an up move in the coming days. So let's go back to SPX. SPX, I would say a bearish bias, testing this strong level. Now let's have a look on the daily chart. It's been quite agitated here. Now if we look at this channel, I could actually withdraw it from the all-time highs in September. Maybe we'll have another wave down as well, but it's more uncertain at this point. This is here as well a very strong pivot, so there may be at least some bounce for a while. So hesitation, range trading for a bit, and I assume the market will try and go lower. Now for today, and again today may not be that important because it's actually a low volume kind of day. Friday was pretty low. Volumes were really ridiculous, below 3 billion. So here we see definitely the same key level, but we see that this one has become a strong resistance. So basically, if we look back a few days, the market was actually wandering above that key level, and normally this would also here indicate the market going down. That being said, we can have a bounce off the resistance and this resistance moving back to where it was before. That can happen, but I would say at this stage we have to take into consideration that the market is likely to go lower. Even though VIX is up, there's a fairly good anti-correlation with SPX. The market would at best go down to 43.40 if it goes down today. Right, that is it for now. Not much else to say. I may record another one later in the week after FOMC, CPI, PPI. Lots of important news coming. And also what really will give us more clarity on the market direction will be earnings. Financials late this week, early next week, and most importantly, the market movers, the big techs, will be later in the month. Thank you for watching, and bye for now.